Finance lease. It is a lease which transfers substantially all the risks and rewards incidental to the ownership of the asset to the lessee by the lessor. That means in our example we have indicated with one small indicative point that if the useful life of the asset is 10 years and if the lease period is considering or it is covering the substantial part of the asset, then it would be considered as a finance lease. Now, why it was considered as a finance lease? Mainly because when you are going to give the asset for a longer duration of time, it indicates that the lessor has an intention to sell the asset. In that situation, the risk or reward in connection with such asset has to be given to the lessee. Now, when such risk and reward is transferred to the lessee, it would be considered as a finance lease. In order to understand whether the lease is a finance lease or not, certain conditions are required to be fulfilled. Now, what are different situations under which a lease would be considered as a finance lease? Let us see one by one. First case, transfer of ownership of an asset at the end of the lease period. Now, this is the most indicative point, which indicates that generally in case of finance lease, the lessor transfers the ownership of the asset at the end of the period. That means after the useful life of the asset, the lessee becomes the owner of the asset as per legal rules. Secondly, the lease term is for major part of economic life of the asset even if it is not being transferred. Just take our example wherein the useful life of the asset was 10 years and the lease period was 9 years. This indicates that majority part of the economic useful life of the asset is being covered by the lease period. Hence, it would be considered as a finance lease. Third indicator is at the inception of the lease, the present value of minimum lease payment will be equal to the fair value of the leased asset. Now, what is the meaning of minimum lease payment? It is nothing but initial lease payment plus periodic lease payment taken together would be considered as minimum lease payment. Now, if we consider the minimum lease payment made by the lessee to the lessor, in that situation, if we are going to consider the fair value of the leased asset, the fair value of the asset generally equates or generally nearby this minimum lease payment. In this situation also it will be considered as a finance lease. Fourth condition or fourth situation, the leased asset is of a specialized nature such that only the lessee can use it without major modifications being made. Now, this indicates that in a situation where it is a finance lease, the leased asset is generally of a category which can be used only by the lessee or which is generally used by the lessee for his own business and profession. Since the asset can be used by the lessee for his own business and profession, generally lessee will see to it that the useful life of the asset or majority part of the asset is covered by the lease transaction, and they will see to it that the ownership has been subsequently transferred on paper to the lessee. So that is an indication of a finance lease. Now, after learning the meaning and situations of finance lease, let us understand how the accounting entries are passed. First of all, we need to segregate the accounting from the lessor and lessee's perspective. Now, first let us look at the entries which will be passed in the books of lessee. Now, as we have learned that in case of finance lease, the lessor tries to give all the risk and reward in connection with the asset to the lessee. So in short, the lessee becomes the owner of the asset, and for that purpose, on the date of inception of the lease, the leased asset as well as the liability for such lease will be recognized in the books of lessee. Now, here the lessee will book that as an asset, the amount of the total value of lease payment, and secondly also the liability, that means the amount which will be required to be paid by the person to the lessor. Now, here the amount should be recognized on the day of inception of the lease, and it will be considered as least of the following two amounts. First is the fair value of the leased asset, and secondly the present value of minimum lease payment from the lessee point of view. That means we will consider the fair market value of the leased asset, that is one value, and secondly we will discount all the future lease payment considering the expected rate of discount, and we will find out what is the present value of all the lease rental payments from the lessee's perspective, and the total of all the present values would be compared with the fair value of the asset. Whichever is less of the following would be considered as the value of the asset. At that price, the asset would be recorded by the lessee. Now, as far as lease payment are concerned, they have to be apportioned between the finance charge and reduction of the outstanding liability. Now as you can say, in general when the payment is made, some portion belongs to interest cost and some portion belongs to the principal repayment. Same rule or same fundamental applies to lease transaction also, that whatever lease payment will be made by lessee to the lessor, we have to segregate that between finance charge, that is interest, and the reduction of the outstanding liability, means the amount due to the lessor. Thirdly, as far as finance charges are concerned, they has to be allocated to various periods. That means we cannot record all the finance charge in the first year or maybe in the last year, but it has to be apportioned over the number of years of the lease. That means whatever is the finance charge or interest, that has to be allocated over all the number of years of lease rentals. Lastly, the lessee being the owner of the asset has to charge depreciation on the leased asset on the same lines as that of other asset. Like we have seen accounting standard 6, wherein the depreciation would be charged on the asset. On same lines will charge the depreciation in the books of lessee. So obviously for passing the entry for depreciation, we'll pass the entry depreciation account debit to asset account. Now we have seen what is the accounting treatment required to be done in the books of lessee, wherein we have seen that the asset should be recognized at least of the fair value of the asset and present value of minimum lease rentals. But exactly how this calculation is made, let us see with one example. Now the question says that the annual lease rentals are 50,000 at the end of each year. The total lease period is 5 years. The guaranteed residual value is 25,000. The unguaranteed residual value is 15,000. The fair value at the inception of the lease, that is at the beginning of the lease period, is 2 lakhs. Based on this, we are required to pass the journal entry for the purchase of the asset in the books of lessee, assuming the rate of discounting at 12.6%. Now, as we have seen in last frame, that the value of the asset will be recorded at fair value of the asset or present value of minimum lease payment from lessee's point of view. That means we have to consider all these payment and convert these payment into the present value considering the discount rate. We have to compare this with the fair value of the asset, that is rupees 2 lakh. Whichever is less would be considered as value of the asset. Guaranteed residual value and what is unguaranteed residual value. Now always remember, when you are calculating the value of the asset in the books of lessee, we are required to consider both guaranteed as well as unguaranteed residual values. Like we have said in earlier case, that we have to consider the present value of all the future payments. Now the guaranteed residual value indicates that the amount has to be paid by lessee to the lessor. On the contrary, the unguaranteed residual value indicates that this value or this amount may or may not be paid. But since we are recording the transaction in the books of lessee, we are also required to consider that value. Now we have to compare the fair value of the asset with the present value of the all lease payment. So what we will do is we will consider the discounting factor and find out what is the value of the asset. Let us look at the table. First year, the amount of lease payment is 50,000. Now when we are making the payment of 50,000, what we need to consider is we have to consider the discounting factor at a rate of 12.6%. The discounting value is 0.890. Now since the payment will be made in first year, we have to discounting it by the discounting rate 12.6% and bring to the present value. So what we will do is we will multiply minimum lease payment into discounting factor, that will give us the present value. So 50,000 into 0.890 will give us 44,500 rupees. Similarly, we will discount all the future cash flows. Second, third, fourth and fifth year, the payment is 50,000 as lease rental. So we will consider the respective discounting factors, multiply with the particular lease payment and find out what is the present value. As you can see here, the present value of all the lease payment is kept on decreasing. This is mainly because when you're discounting the cash flow, slowly, gradually the value in future will fall. Now, after considering the lease payment, we are also required to consider what is the minimum lease rental payment at the end of the contract period. Now, we have seen that there are two types of payment. One is a guaranteed and one is an unguaranteed payment. So we'll consider both of them, considering the discounting factor at fifth year. So 25,000 into 0.552, that will give us 13,800, and lastly 15,000 into 0.552, that is 8280. So we'll consider the total of all the present values, that will give us 1,99,780 rupees. Now this value indicates the present value of all the minimum lease payments. Now once we get both the values, what we have to consider, the present value of minimum lease payment and the fair value of the asset. That means 1,99,780 or rupees 2 lakh, whichever is less. that would be considered as the value of the asset. Now since 1,99,780 rupees is least amount, so we will consider or we will record the asset at the same price, that is 1,99,780 rupees. Now since it is a finance lease, the entry will be passed in the books of lessee, debiting the asset and crediting the lessor. So entry will be asset account debit to lessor account rupees 199,780, being recognition of the finance lease as an asset and as a liability. So when we record asset account debit, that means asset is recorded, and when we credit lessor's account, that means a liability is recorded.